Yo, welcome back to the Money Matters podcast. I'm your host, Jack. You are joined full staffed off the IR. We have a healthy trio. You're joined by my father, Bill, my chief of staff, Dylan. The three of us make up the Money Matters podcast and Mailbag Mondays, where you get an episode from us every single Monday. Dad and Dylan, how you guys doing?
Excellent.
So Easter episode. So for those that celebrate, happy Easter, happy holidays. And before we get started, our real quick disclaimer almost is that there are no sponsors. This podcast is brought to you by ourselves. We've been in Bitcoin for over a decade. Bitcoin's been around for 15 years. My dad's been in it for 11. I've been in it a large portion of that. Dylan, I think, what would you count your first entry into Bitcoin? 7 years ago?
Yeah, 2016.
Long time. So this podcast is brought to you by us. We do not have outside sponsors. Nobody influences our agenda. Nobody influences our opinion. We, as old school Bitcoiners that have been in the space, we like having raw, authentic, everyday conversation with you guys once a week. We think it's important, and we just fucking enjoy it. And we like that you guys enjoy it. So with that, let's get started. I think we're talking about SBF sentence. I think we're talking about every single week people still think that the ETF is going to manipulate somehow the Bitcoin market and that there's some institution that's going to crash Bitcoin. And then I think we're talking about Bitcoin versus real estate, a question from a listener. So where are we starting, Dill?
Let's start with Sam. Let's start with Sam Bankman Fried, aka Binky, aka the biggest financial criminal in United States history, I believe. What did you make of the sentencing? He got handed 25 cold hard years. What do you think of that?
You guys, I have no idea. I mean, financial crimes, there's just so much going on. Don't think there's a lot of sympathy for the victims. I don't know. I don't know what to make. And with all of his, connections, I'm pretty shocked. I don't know what to make of that. I don't think that whole nightmare. Luckily, I don't think we know. Maybe it's a handful of people that kind of got trapped in that, and even second degree, right? Invested in somebody who was invested in that nightmare. Now, I mean, the whole history of Bitcoin, whether it's starting with, Carpellas or, liquidations, seizures, and, I think Carpellas spent some time in prison, right? It's probably a phase of this business that is best in the rearview mirror, right?
Yeah, I think in my opinion, there's a few important things that we should take away from SBF. One, I don't mind the 25 years. I'm not a big lock him in a box and threaten him with weapons even more kind of guy. He did really wrong shit, so he should go to jail. But 25 years is aggressive enough. I mean, he didn't shoot up a school. He didn't murder a bunch of people. And so I have no issue with 25 years. Seems like a harmful sentence enough to punish somebody who did a lot of wrong. I think a few things. One, the first person at fault if you got burned by FTX is you. The second person at fault is Sam. I think that we should all understand that Bitcoin allows you the sovereignty to actually own your own asset, and counterparty risk in this industry is real, meaning that if the institution that you use goes under, there's no bailout. What happened, it's super important to understand what happened. We didn't print a bunch of Bitcoin to give back to the creditors that lost all of their money, and which would have socialized all the losses and diluted my Bitcoin holdings. If you held your Bitcoin at an institution that was corrupt and didn't have the wherewithal to know how to custody Bitcoin, you got fucked. And so my advice to anyone is to hold their own Bitcoin always. And if you can't assess who a good institution is and they go under, then you get screwed. So first and foremost, I think everyone should appreciate the fact there are no bailouts, and something like FTX happens and your Bitcoin is on a centralized entity, you get screwed. So that's, I think, super important to point out. And this is a very interesting financial crime where no bailouts. Like I, as a Bitcoin holder that wasn't on FTX, I didn't get diluted. That's for one. The other, I think, point is, how about we pardon Ross, right? Yeah. If you look at Ross Ulbricht, they dropped the murder for charge case, right? I think. So there's no more.
Never even brought it. Yeah, it was somehow used in sentencing, but I don't think it was ever brought. I don't think he ever had a chance to face that accusation.
Right. So I'm talking about, for those that don't know, I'm talking about Ross Ulbricht, the founder of Silk Road, the website that allowed peer-to-peer trade of anything, but primarily was used for drugs. And I think, though, Ross not only introduced a new novel way to trade on the internet, but he introduced the world to Bitcoin, in my opinion, which is I'm very appreciative for that. And so this guy, nonviolent crime, he did not defraud anybody. They tried to bring murder accusations to him. Those charges were never actually brought to court. Those were dropped. And now he served what? 12 years, 13 years? And so if Sam Bankman Fried is the largest financial crime in American history and he gets 25, so what? That means he's really going to serve 15 to 20 on good behavior. I think we pardon Ross. That was my two takeaways. My first takeaway is, okay, Sam Bankman-Fried's a bad guy. Should we send him the death sentence? No, I'm not a big violence guy. 25 years seems reasonable, but the lesson here is there are no bailouts in Bitcoin. You should take it. I mean, it's the luxury that we have that you get to custody your own shit. So before you go finger pointing and say, no, I want that guy in for 50 years. I want him in for 100 years. Well, who gives a shit? Just custody your own Bitcoin. Then it don't matter. So just a reminder there, no bailouts. And then the other is, I consider Ross a hero personally. And I think it's just a reminder of how the state, I've never been a fan of how violent the government can be and can get. I mean, we now live in a world where cannabis is legal, right? Primarily, and cannabis is encouraged for use for depression, for illness, for injury. Like the best athletes on the planet talk about advocacy for cannabis. Psychedelics are now going to get legalized. It looks like it is in the Netherlands, and people are using mushrooms. So a lot of the drugs that Ross was providing a marketplace for are now legal, nonviolent, and he introduced the world to Bitcoin, which at the time was, near death sentence idea. But after now we have an ETF approval. So you've got Larry Fink buying Bitcoin. You've got LeBron James of the world smoking weed, and Ross is still in jail. I don't know. That's my SBF opinion.
Yeah, I think some people view the charges as being a little light, in lieu of the fact that there was this financial crime side of things, and we all know about the $8 billion hole, and this guy was essentially just stealing money from his customers and gambling with it. But there were other charges leveled against him. They eventually got dropped, but I mean, there's like election interference, China bribery. I mean, this guy was doing an insane amount of illegal shit, and 25 years seems a little bit light and seems incredibly light with respect to Ross, who I believe Ross is serving life in prison without the possibility of parole.
But I don't think it makes SBF light. I think it makes Ross look heavy.
That's another way to put it.
I'm not a fan of, oh no, that guy really put a bullet through his head. That's just so violent. It's so violent. It's like, I don't like government bullying, where they're going to put guns to your head and lock you in a box and torture you. I don't want, my whole point is Bitcoin brings society back to what it's intended to be. If you leave a deposit at an institution that has no competency and they lose your money, you're fucked. So if I were you, I would just never leave your Bitcoin at an institution. I was showing someone some of our strike numbers financials, of talking to one of our early investors. And they're like, holy shit, do you guys do a lot of on-chain Bitcoin volume? What the fuck? What are your customers doing? Like, they're taking their Bitcoin to cold storage, that like they should be doing. So I recommend, so the point is, in Bitcoin, you own your own counterparty risk. If an institution goes down and you had Bitcoin on there, that's your fault first and foremost. And then yes, the person that defrauded a lot of people, 25 years seems reasonable. He's going to lose all of the valuable years of his life. He's not going to be able to marry anyone. He's not going to be able to reproduce, start a family. He's never going to like be old enough to watch his kid graduate from college. I mean, that's a punishment that's worthy. I don't think he needs to be any further tortured. But yes, for someone else to get a more severe sentence for like now Bitcoin being adopted by Wall Street and the like best athletes and celebrities in the world smoking a bunch of cannabis to improve their health, for someone like that that provided an innovative marketplace 10 years ago to have a double life sentence, fuck you. That's my, I don't think to justify Ross, you need to torture Sam. Fuck Sam. Just don't leave your Bitcoin on exchanges. Who gives a fuck about Sam? Don't eat cucumbers, eat steak, don't eat cucumbers. Take your fucking Bitcoin off of exchanges. But fuck that kid. Why are we spending time talking about this kid? But there was a hero that introduced the world to Bitcoin and was early into realizing that, this notion, war on drugs notion, was a bunch of nonsense, and that there's nuance involved in what people should be allowed to experiment and put in their bodies. And he was right. A lot of the drugs that he was allowing people to free trade are now legal and helpful to the health of a large population of the world. And the asset that he used is now being adopted by Wall Street in the face of the greatest stretch of fiat debasement ever. And so he was right. He was just early. Fuck Sam, though.
Yeah, I was walking around Chicago. Oh, go ahead, Bill.
No, the scandal-ridden history of Bitcoin is clearly moving in the right direction. I remember when Mt. Gox went down, when that was presumed to be the end of Bitcoin, right? I mean, that was Bitcoin's first, pricing mechanism. I don't even think we had CME futures when Mt. Gox imploded, right? And Bitcoin dropped about, 40%, something like that. We've been, fast forward. Well, there's always been, exchange problems. It wasn't just Mt. Gox. Other exchanges failed, but there was also a lot of government seizures and liquidations, put a lot of pressure on the market. The history of Bitcoin is absorbing liquidations, government seizures, and exchange failures, and it is undoubtedly getting better. I mean, FTT, they didn't even have Bitcoin. That's peripheral. The latest failures, right, as opposed to Mt. Gox, which was the main volume engine for for Bitcoin, this FTT failure doesn't really have anything to do with Bitcoin, right? That's a shitcoin collapse. It's like we're moving in the right direction. The SBFs and Carpalises are slowly doing less and less damage to us, and we're moving into places like CME, Fidelities, BlackRocks, who are not populated by SBFs and Carpalises.
But the sneaky takeaway, which happens time and time again, but now we're getting at a larger and larger scale. So SBF was front page news, continues to be, is you didn't need a centrally planned intervention to save this market. That's the part that if you were to sit down the Federal Reserve and Jerome Powell, they'd say, no. According to Keynesian economics, we need to step in and provide the right amount of inflation or the right amount of interest rate hikes to save a financial collapse. And that's clearly a lie, because there was a financial collapse in Bitcoin, and FTX, one of the biggest exchanges, didn't have $10 billion of capital that they claimed they had. The market fell apart, and without any centrally planned intervention, Bitcoin is now at new highs. We didn't need to print any money for anyone. We didn't need to bail anybody out. that's how financial markets and society should work, is that you own your own risk. Risk isn't institutionalized, where if a bunch of people at FTX blow something up, that you socialize the losses and everyone pays the cost for someone else's mistake. And so every single time Bitcoin resolves of itself by doing nothing. So at next time there's a financial collapse, next time SVB goes down or some bank, and the government comes out and says, we need to print a lot of dollars and burden that cost on everyone. So everyone's groceries are going to get more expensive because this bank fucked up. That's a lie. That's bullshit. The market doesn't need that. So to me, this is another example of why Bitcoin is an innovation and correcting a lot of the wrongdoing of the last 100 years of central banking and centrally planned nonsense. Because we got rid of that criminal. So that guy's now behind bars. Bitcoin's back at all-time highs. The people that made mistakes with their Bitcoin by trusting people they shouldn't have been trusting now have learned. And those that did the right thing didn't burden a cost for it. I kept my Bitcoin in cold storage. So guess what? I didn't get fucked at all. I don't really give a shit about Sam's sentencing. That's why I'm not sitting here advocating with a pitchfork like 25 years. They get 225 years. I want to see that kid puking blood. I don't want any violent harm to whatever. Yeah, lock them up. Cool. Onwards.
I know, minor point, Ed, but I'll regurgitate my familiar opinion. Yes, I am from the Chicago financial markets. And when you say, yeah, financial markets should not deal with Fed bailouts, SIPC insurance, and in Chicago, they don't either. People used to ask all the time, is my money insured? No, it isn't. And you don't want it to be, right? You do not want the federal government insuring your Lehman account, because then when that insurance is needed, it rarely functions. The far better system is the one Bitcoin has, right? We don't bail anybody out. So we the industry sheds the Carpellises and the FTTs and stuff. And it's kind of similar in Chicago. I memean, there's no subprime debt, Lehman nonsense going on there. It's a more, like I said, when people characterize the traditional finance world, you're talking about, more New York, London, and not Chicago. Chicago is very much traditional finance, but we don't have SIPC insurance and circuit breakers and bailouts. You got 10 minutes. The Clearing Corp calls, you got 10 minutes. You don't got the funds. Yeah, they take your business and deposit it somewhere solvent.
But there are obvious takeaways from these concepts that may not be as intuitive if you grew up just in a world where bailouts are the norm. This teaches the natural market behavior and lessons learned and natural innovation. So my analogy is going to be, so before this, I love long distance running. Before this episode, I just ran almost 6 miles. And I work out. I take care of my body. I try and eat organic foods. If somebody binged a dozen donuts every single day and are like, oh, shoot, I accidentally blew up my body. Now I'm fat and overweight and gross. And someone centrally planned, we're like, well, we're going to socialize those losses to fix your problem. So Jack, you've accumulated 100 miles ran this month and a lot of grass-fed steak. We're going to take some of that and we're going to socialize that and give a lot of that to this fat person. So all that hard work and energy that you've produced and consumed in your own body, we're going to socialize it all. So this fat person, does that make sense? Is like, I'd be so pissed. I'd be like, this fat person made all sorts of mistakes and ate a lot of donuts and didn't do jack shit. And I've been out here working hard. And so the lesson learned, if you don't socialize the losses, is stop eating donuts, right? Like stop leaving your deposits at FTX. Stop using leverage, right? Stop investing and over levering yourself in shit coins. And so the market kind of naturally, so you've seen Bitcoin just get more and more mature. The holders of this asset use your behavior. And so the reason that dietary works the way it does, if I ran and lifted weights and ate well, only for the government to be able to take that work away from me and give it to fat people for making mistakes and eating a lot and sitting on the couch, then I wouldn't go running. And fat people wouldn't stop eating donuts, right? You know what I'm saying? Is like, So the only way to fix your problem is self-responsibility, taking ownership and learning from your own mistakes. But if you centrally plan and you intervene with society and you try and socialize losses, then you're very dangerously fucking with human behavior, which is the worst thing you can do. Money is abstracted time and energy. And so if you're going to convolute that and divide it up and cherry pick who gets what, that's the worst thing you can do. So the best thing about Bitcoin is everyone learns. I bet you the next time, I bet you this market cycle, people use cold storage. You've got Jack Dorsey now building a hardware product. That's going to become a lot more mainstream, people not making the same mistakes. So that's the other thing about all of this, is that Bitcoin, you see progress. Is every single market cycle, people learn. People understand what not to do. People learn from their mistakes because they have to. You don't get bailed out. There's no socializing losses. In the fiat world, that's not true. Every decade, you get a financial crisis. None of these banks learn anything. They still fractionally reserve run their shit. They still lever themselves up to the tits. They still institutionalize risk. So that world constantly fucks up. They constantly make the same mistakes. They constantly do dumb shit. So that's another thing that probably isn't as intuitive, but when you bail people out, like if the guy eating donuts is just going to gain a bunch of weight and then like get bailed out, he's just going to eat donuts for the rest of his life. He's not going to, right?
Yeah. No, I agree.
Yeah. Yeah, no, I think that's 100% accurate. Transitioning here to what can only be described as more legitimate institutions than, for example, an FTX. There's a lot of concern in Bitcoin Twitter right now around the notion that institutions are gobbling up all of the available Bitcoin. There will be no Bitcoin left for anyone to buy. And I think that that's a bit of a, I don't know, let's not mince words. That's the wrong way to think about it. But I'm curious your two's takes on that. At some point, will institutions gobble up all the Bitcoin, and even if I want to buy one, I won't be able to?
Oh, same thing I always think. I'm sorry we didn't consult. We didn't put you on the committee for who's allowed to use, an open source protocol. You probably didn't like it, right? When Cyprus was violating capital controls in the euro, you may not have liked it when people were buying drugs with it. We didn't ask you. It's right. It's an open source protocol. I'm sorry that we didn't check with you before allowing institutions to buy it. But yeah, I'm surprised it took them this long to get here. There is no committee for the proper usage of Bitcoin, and Satoshi really never gave a whole lot of indication on what we were supposed to do with it. Yeah, you can do whatever you want with it. I'm surprised it took them that long to get here, but if anybody feels like, God, this was a lot more fun when this industry you learned about it on the local Bitcoin level, you priced it at local meetups is how you transact it. Now that's not true anymore. Now you guys are trading, on more of an institutional market. I don't know if you want to get all sorts of, nostalgic about 10 years ago, fine. But I'm surprised it took this long for this market to get more institutional and more grown up, frankly.
Yeah.
Think about this. If you were a speculator, a guy like me, you would just go to our Bitcoin. You would go to Reddit, and there would be threads discussing support and resistance levels and where are you guys putting your stop. Like, you guys are trading with institutions now. That's just not worth it. Drawing lines on charts and this moving average crosses that moving average. I don't think that Fidelity and BlackRock, and they don't trade like that. And it's now more than ever, I think. Like I say that every time this subject comes up, I'm shocked that your most popular feature isn't a DCA mindless buy, kind of auto buy and hold and not trying to time it. But you guys say, no, people, your customers buy dips actively and actively try to negotiate around these price moves. It's the institutional market now, guys. You are trading against people with 24/7 desks and contacts with, industry contacts. And it's going to get a lot harder than drawing lines on charts.
Yeah, there's a lot. I never understand why this is always a topic of not of this podcast, of just the conversation on the internet of like institutions gobbling up a bunch of Bitcoin. There's never going to be any Bitcoin left. What was the initial question, Dylan? Remind me specifically this week, but I feel like every week there's someone worried about.
Yeah, this specific week, the concern is around the availability of the supply of Bitcoin if institutions are going to come in and quote unquote gobble it all up. Will I, as the layman, be able to buy Bitcoin if BlackRock buys it all, for example?
Well, that's silly. But I think if there is any legitimate concern in the institutional involvement, it would be that they can exert some type of control on the protocol, that there's enough heavyweight longs that can tell core that, make adjustments in core, maybe to, I don't know, block size or, whatever early critics. Remember, people would come to meetups and say, when we got 21 million, it's a consensus mechanism. We'll just make it 1 million.
Well,
institutions, I suppose, do raise that risk that they can throw their elbows around. I just think, as I always say, Bitcoin spent the first 2 years with no monetary value, distributing it amongst hobbyists, but certainly not financiers. And I think is so well distributed while it was worthless that it's going to be almost impossible to amass enough to bully, to throw your elbows around.
Well, we should talk about this. Already happened. We should talk about this chapter of Bitcoin history. It's called the block size wars.
Yeah.
This happened. Now, it wasn't an institution the size of BlackRock, but it doesn't matter is the point, the way Bitcoin's designed. You can't change the...
It was every heavyweight in the industry, though.
Oh,
right?
Yeah.
Right. It wasn't BlackRock, it wasn't Fidelity, but it was that...
Yeah.
The 8 year ago version of it. Yeah, we had all the big guys got right in the New York agreement. Right. Nothing says consensus mechanism like gathering 8 or 10 of the big shots in a closed door meeting and deciding the direction of the protocol. Right. That was never going to work, but they tried.
Yeah, but BlackRock. So the way Bitcoin works is it is impossible for them. So let's just do a little bit of history. So the perceived problem that all the institutions had, you had a bunch of venture capital driven businesses that wanted growth and wanted performance as fast as they could. They didn't like how fast Bitcoin blocks and transactions were processing. They wanted to raise a certain configurable number within the Bitcoin protocol to presumably make Bitcoin more attractive for payments and other use cases that would drive them growth. So all these companies sat in a room in New York City and devised up a change to the protocol, and then walked out of the room and basically announced to the world and said, we are now changing Bitcoin. Now, the problem is that you can't do that. In order to change Bitcoin, you have to change every person that runs Bitcoin. So the way Bitcoin works by a distributed network is all of us that run Bitcoin run the rules. So there is no central place to change the rules. You can't walk into the boardroom, or you can't walk into a building in New York, or you can't walk into the exchange in London and change the Bitcoin rules. You'd have to change it on every single person's computer that's running Bitcoin. That's why I like the analogy of chess. Is if someone's like, all right, you're kicking our butt in chess, you're up a queen. We're going to go back into the room and come up with a different version of the game that's going to give us an advantage. You walk out, I was like, go ahead, you play the move. You're going to be disqualified because the move's illegal. How are you going to change the rules of chess? What room are you going to walk into in the world? Or what pitchfork are you going to march outside DC and change the rules of chess? Chess is a distributed game now, like thousands of human years. You can create your own version of chess if you want. You can create boardroom chess or Jack's chess or something, but you can't change chess. In the same way, BlackRock can do whatever they want. If they want to say, I'm going to create, we're going to lift the Bitcoin, I'm going to mine a block that implies Bitcoins. I'm going to mine a Bitcoin block that's going to imply Bitcoin supply is now 42 million. Go for it. That will eventually be traded as BlackRock Bitcoin, but that won't be my Bitcoin because you didn't walk into my house and change the rules. Here, I'm lifting my computer up. You didn't change the rules on my computer. And you'd have to do that. So it's impossible for them to do that, just so that people are aware. So what ended up happening is these institutions changed the rule into Bitcoin. None of us updated our computers because we were like, fuck you, go fuck yourself. This is the whole reason we do Bitcoin, is so that you can't centrally plan and control it. And that version of Bitcoin is now Bitcoin Cash. So it's not Bitcoin, it's a different version of Bitcoin. And the market values that version of Bitcoin at nearly zero. So if BlackRock wants to, they could buy as much Bitcoin as they want. This is the thing, is that Bitcoin's rules aren't determined by how many people, like who owns the most. Like Michael Saylor, BlackRock, these people cannot change Bitcoin. In order to change Bitcoin, you'd have to gather public consensus. You'd have to get everyone that runs the rules to all agree and say, we all think this is the best version of Bitcoin. We're going to all update based on our own self-interest. But it doesn't matter, like, which is not true for something like Ethereum. For something like proof of stake, whoever owns the most is the most powerful. But that's why that is such a dangerous consensus protocol. But for Bitcoin, we've already seen this. Institutions time and time again try and come in, change the rules. They end up creating their own version of Bitcoin. That version of Bitcoin is worth nothing because the collective people don't value it. So if BlackRock owned 50% of the Bitcoin supply, which is, in my opinion, mathematically impossible, they'd have the same odds of changing the rules of Bitcoin as if they own none. So the odds are zero.
I know, in a weird way, a weird analogy, but I think it kind of works, is remember when school boards did not like people, like our students are getting uncomfortable teaching Tom Sawyer, and Huck Finn uses the N-word all the time, right? If you ever read those books. And so they wanted to kind of, it's making our students uncomfortable. And so if it's going to be in the school library, we're going to edit out, all that language. And I go, well, one of the problems with that is, I think I probably have a copy of Huck Finn in a cardboard box in an attic somewhere, right? It's too well distributed for you guys to scrub the language out of that per your modern sensibilities. It's just too well distributed. It's everywhere. And that's, the same way. You're running a node right now. If they're going to try to, if there is a BlackRock is going to exert some control to change a block size or change some metrics in it, how are they going to change the one that's running on your node, right? It's too well distributed.
Right. Yeah, the way, just so people that aren't aware, the way Bitcoin works is whenever there's a transaction, wherever there's a new block in the blockchain, that data gets sent to all the computers that are running Bitcoin. Those computers validate that the data they're receiving follows the rules that are in place. And if it doesn't, we don't include it in the blockchain. So in order to change the rules, you have to change the computer of everyone that's running Bitcoin. And it doesn't matter how much you own or whatever. And so even if you were to walk into my house with a gun and change my rules, it still wouldn't change the whole network's rules. So in order to change the rules, you got to get everyone to agree on an upgrade. And so that upgrade has to be in the best interest of every single person within the network, not within BlackRock. So that 21 million will never change, in the same way that the rules of chess will never change. You could create your own board game if you want and try and get people to adopt it, because that's a very different concept of changing the rules of chess, making a pawn move like a queen. Good luck. No chance.
Yeah,
but
I think.
Sorry,
go ahead.
as far as the institution, like, that's also just not how markets work. Like, we're going to run out of Bitcoin. BlackRock's going to, like, for one, I don't, like, there's a price for everything. If Reinsdorf, the owner of the Chicago Bulls, were to walk up to me and say, I'll give you the Chicago Bulls for 1 Bitcoin, I'd here, take the Bitcoin. So, right? I don't understand that concept. There's a price to everything. The point of Bitcoin is not to die with all of them. You live your life. I mean, we've already had this conversation on this podcast a million times. Like, I think I'm personally getting to the point in life where it's just, what else do you need? If you have the things in life that you need and you want, yes, I sell my Bitcoin for what? I don't know. Like, I for people, they're like, oh, you got to cash out. So what? Sell it for dollars? No, thanks. Cash out.
Problems with that. Obviously, the other problem with that is capital gains tax. That there's got to be some answer. Or you're right. If you're an old-fashioned Bitcoiner, and depending what state you live in, you're giving up half, right? If you want to monetize it. So no, I think the industry is finding more and more ways to monetize it without P&Ling it, right? Without offset, right? Borrowing against it, or I mean, and that's one of the main advantages of an ETF structure is that traditional finance is more familiar with those, so they will lend against it. Borrowing against Bitcoin, is very expensive and a high stakes game, and you got credit risk and everything. But if you get ETF structures, then it's easier to monetize without offsets, which I think is where the industry should go, right? I mean,
it's going there. Yeah, my general point was I don't understand the question of like BlackRock's gonna buy all the Bitcoin. Okay, it's just market dynamics. Like, yes, if Bitcoin gets high enough, yes, you can have some of my Bitcoin if I get to own the Chicago Bulls. If I get to, but I mean, it's like any market, right? And then so. Yeah. I never understood that. Like when the way to hammer this point home that I've always loved is when people are like, what if the government prints so much money? What if they just print a bunch of money to buy all the Bitcoins? It's like, okay, so they're going to rapidly devalue the dollar in the assumption that I'm going to give them my Bitcoin for those dollars. I would never, right? Like if the dollar was rapidly collapsing, I would not why would I give my Bitcoin for them? The price chart would just be going up 100% a day. I'd be like, oh yes, now's the time to get their collapsing piece of paper. So if you think logically about it, at a certain point, you're going to be like, give my Bitcoin in exchange for what? Not for dollars, not for real estate, not for Tesla stock. Yeah, it's going to get hard. Okay, you want to give me the Chicago Bulls? You might get a couple, but what else, right? Like, so I don't know. It's a natural market. BlackRock's going to buy all the Bitcoin. Then what does that mean? All the Bitcoiners own the rest of the world? Like, it just doesn't make any sense.
Hardest thing to do, right, in speculation is sit on your hands, right? I feel I should be doing come on, Bitcoin's on the news. There's a halving coming up. I'm a speculator. I should be doing something. No, you really should be doing nothing. You got a 10-year, 8-year, 6-year, whatever head start on BlackRock and Fidelity. You get to sit on your hands for a while, right? And let them, right? I mean, you got to lead on them. You got there first. You're right. It's an ownership asset. We aren't making any more of them. So let them join the party. Let them come in. And then I am not interested really in doing a whole lot of trading right now. I want to see, just watch the ETF inflows. We should be done with a lot of the baggage that this industry drag bunted into, right? A lot of the failed exchanges, government seizures, government liquidations. We've kind of running out of those. And now, what the industry is traditional finance is so much more comfortable with ETF structures. I don't think you got to do anything. I think it's one of those rare times you just get to sit on your hands for a while.
I think that's a great piece of advice, because bringing this full circle, you were saying that institutions coming in might have made it a little bit less fun, and that was an experience I would say that I've had initially when I got into Bitcoin. I think it was trading at $800 to $1,200, somewhere around there. And to your point, trading was fun because I was trading against a bunch of idiots on Reddit. Right. It was like, oh, what does this button do? And I was one of those idiots. Not to say that I was any better. It's hard to say that what I was doing could actually be called trading. It sounds a little bit more appropriately like gambling. Again, I had no business trading anything. I had no idea what I was doing. And at this point, right, Bitcoin is such a humbling experience. I buy it when I want it, and I just look at the stack grow. That's all I do. That's it. And that strategy served me far better than trading ever had. Well, I agree with you on that.
Let me get your reaction then, Dad, from what Dave Portnoy, the Barstool Sports founder, said when he said he doesn't respect people that bought Bitcoin a long time ago and have just sat on their hands, that's lucky bullshit, and he's not sure if they deserve to be wealthy. Now, I obviously violently disagree with that. But on the notion of sitting on your hands and how difficult that is and being right against the crowd, what's your take on someone who holds that opinion of people that have been holding Bitcoin for a decade are just lucky? Like he thinks you're just lucky.
I told you, I think the ability, to do nothing and let a market evolve, mature, all the ups and downs. China bans Bitcoin. The IRS is all. If you've been a Bitcoin for 10 years, you've almost certainly endured an IRS audit. To be able to endure all that is now somehow lucky or easy. I don't know. I think. I mean, how many people? Depending when you got long, you told your friends about it. They told you were an idiot. I mean, people that understood that I was from the world of finance and was probably good at it. And I would say, I'm not interested in that. I'm not interested in getting drugs over the internet, and I'm certainly not interested in an IRS audit. So thanks, but no thanks. I mean, you heard that for years, right? So that makes us right place, right time, lucky. I don't think so.
No, well, I think a lot of his thesis too is that markets are like gambling, like sports gambling. Like, what's your opinion? Because I have one maybe after of like, like being early to Bitcoin is just like, taking, I don't know, taking James Madison over Wisconsin in the first round. Like, you just got a little lucky. You placed the right bet. Your parlay hit. You made a lot of money. Good for you. You rolled the dice and it landed on your number. Like, you consider markets gambling.
Gambling is you're seeking risk. Speculation, you're taking it out and you're pricing it. Your speculation has an economic function. Gambling does not. Gambling, you are creating. There is no reason to roll a ball around a roulette wheel. I'm not adding value to anything. I'm seeking risk just for the thrill of pricing, of enjoying risk. Speculative markets take risk out of the market. They take it. They take it away. If you're, again, I want to get into Bitcoin mining, and I'm priced out my rent, my equipment, the hash rate. I've done the math, and this will make sense. If I run this for 6 months, I'm in the black. Well, you don't know what the price of Bitcoin is in 6 months. You don't know what the hash rate of Bitcoin is in 6 months. So all of your planning gets thrown out the window. You're actually a gambler if you don't use forward markets, right? Then you're gambling. You're gambling on what the price is going to be 6 months from now in a market that, like I said, has 80% bear markets twice since I've been trading it. So you're gambling, but speculation is not gambling. It is pricing risk. Casinos that is creating risk just for the sake of pricing it. This is offsetting, right? Is pricing risk an economic function?
But how these guys are using the term gambling, wouldn't you argue that we're all naturally gamblers in everything? Like, so like what I would say to Portnoy, like, I am going to London for Peter McCormick's conference in 2 weeks. I'm going to London. I have two options to get there. I could either walk and catch a kayak boat, or I could fly. Like, walking and by foot is maybe arguably like a bit safer than the man-engineered airplane, but the airplane's less energy from me. And so I'm evaluating the risk in my head of, for the time and energy I'm going to save, is it worth the risk of getting on a flying vehicle that was man-made and man-engineered versus just using my 2 feet and like walking all the way across the country or whatever, right? Do you know what I mean? Like, the human brain is always constantly evaluating risk, and every single day. Like, if you took an elevator versus the stairs, you gambled that elevator wasn't going to break and crash and kill you. The stairs are way safer, but you gambled, right? I would make the argument that we're like naturally, because this goes back to my keynote in Portugal, Dylan. So I did a keynote on Bitcoin is time. It's the idea that nobody knows the future. So if the future by definition is uncertain, which it has to be to create an arrow of time, right? Like, nobody knows tomorrow, makes us all gamblers today, period, in everything. In everything. You could just eat rice and bland chicken for every single meal, but sometimes you drink a fuck ton of alcohol and eat some like highly industrialized produced sugarcane garbage because you've evaluated the risk reward, right? So everyone's a gambler. And so if the market, I think a market is just the collective population trying to forward price the odds of the future, right? That's what a financial market is. And so for you to say that you had the wisdom that the crowd didn't about Bitcoin 10 years early, and that's lucky, that to me is like, because first of all, everyone's a gambler. We're constantly gambling. So I live many floors up in my building. After this, I'm going to go spend Easter with family. I can either take the elevator or the stairs. I'm likely going to take the elevator. That's a gamble. The elevator could break. The stairs are probably safer. But for the energy saved on walking all the way down the stairs, I'm going to take the elevator. So everyone's a gambler. Markets are the collective population trying to price the future, since the future is perpetually unknown. No one will ever know the future. And so for someone to say you knew more about the future than the collective wisdom of the crowd, and you held that conviction for 10 years, makes you lucky. Fuck you. It's the dumbest thing. You were first to understanding the future than the collective wisdom of the crowd, given that we're all gamblers. We all have to speculate on the future, right? Like everyone has to take a position on the future. If you didn't buy Bitcoin, your position on the future is Bitcoin's not that valuable. Am I making any sense? Like that's why whenever people say buying Bitcoin a long time and holding it is lucky, it's like buying Bitcoin a long time ago and holding it is being first to understanding the future against the collective wisdom of the crowd. The crowd had mispriced the future, and you understood it better than everyone else. How's that luck? Isn't that just being better at being human and gambling on the future?
Gambling. I mean, gambling is introducing risk for the sake of, the enjoyment of pricing, of betting on outcomes. Speculation, right, is an economic function. You can get a better mortgage. You can get a better car loan, because there are forward markets on interest rates, because the financial industry knows that if interest rates, double in the coming 6 months, they're not going to get stuck because they've already priced the loan that, the mortgage they wrote for you. It just makes everything, the ability, it's not gambling, right, is just the creation of risk to speculate on risk. But financial market speculation mitigates risk, right?
Yeah.
It lowers the cost of everything. It is not gambling. It's kind of the opposite.
Yeah, the term gambling is being like convoluted a little bit. But what I mean, everyone's a speculator. My message to someone like Dave Portnoy is everyone's constantly speculating and evaluating the future, because the future is perpetually unknown. So everyone's taking a position on the future. And the collective position on the future 10 years ago was, we don't know the future, and we don't think Bitcoin is going to be that valuable in the future, because people are valuing it at $10, $100. And for someone,
we're gambling out and put uncertainty in or something.
Yeah. And so, we're all speculating
on price uncertainty. And there's nothing I can do about that, no matter whether you take, a car loan or an adjustable mortgage or a fixed mortgage, you are all speculating. Yeah. Or don't take a mortgage or rent for a while.
Humans are naturally speculators. Yeah, I got to go to Easter after this. I could call an Uber, or I can walk. If I were to walk, it would take me 12 hours to get there. If I call an Uber, it would take me fucking an hour, 30 minutes. But there's risk in that. My Uber driver could drive me off the ledge. We're all speculators because the future is unknown. But 10 years ago, the future was unknown, and the collective market was like, we don't think Bitcoin is going to be a big part of that future. But there are some people that said that's incorrect. I actually understand the future more than you do, and I value Bitcoin as part of the future way more. And then you held that conviction despite everyone saying you were wrong, and that's somehow lucky. That would be my message to Dave Portnoy: is we're all speculators, and early Bitcoiners that were able to hold it, we're more accurately understanding and valuing and speculating on the future than you. So you go fuck yourself. That is really like, but I hate when people say that. It's not just Dave. People always say, "Oh, you just got lucky." No, I just speculated on the future far more accurately than you. And that's what we all do. That's what we all do every day. So it's not like, oh, I didn't know. You are speculating on the future. But if you just own dollars and your whatever 401, whatever, you just own dollars in a basket of index of stocks, you're speculating on the future that's going to be valuable 10 years from now. Whatever. Anyway, that's my.
Which I could blank that screen out and guess your age, and I wouldn't be off by more than a couple of years, because I don't think I just don't think people, when I was your age, people worried about that. The base unit is dollars, and dollars are how you kept score. And for your generation to have to worry about the value of the dollar because I have to pay off all my student loans. We didn't have any of that because I have to negotiate, my way around devaluation and increasing taxation and burying myself in debt. It's just funny to hear. Like I said, you can blank those screens out and I'll guess how old you guys are, and I won't miss by more than a couple of years, because that is not something my generation ever worried about. The value of the dollar. I mean, and I was a currency trader, but I wasn't like, but the dollar was the base, it's the base unit, and it was protected. And I don't think you guys really feel that your retirement is going to have the purchasing power in the same way we do. I mean, that money in the bank was good. Now you guys, like, which bank? What kind of money? Right? It's just
I think another thing that like really pissed me off about that rant was the implication that if you're an early Bitcoiner, you have 10,000 coins and held it till now. That's like an easy thing to do. That's insane. I mean, put yourself in that position. If you have 10,000 Bitcoin, if you have a position size of 10,000 Bitcoin, every single time the price moves by $1, your position moves by $10,000, right? And so if you're, looking at one of these days, there was a day, January 11th, 2021, the price fell from $40,000 to $32,000 in a day, in one day, right? And so simple math, I'm a napkin math guy, simple math guy, don't have the biggest brain ever, but that, if you have 10,000 Bitcoin, every time the price moves by $1, you either gain or lose $10,000. The price moved $8,000 that day. That person lost $80 fucking million in a day and didn't do anything about it. That's the most difficult thing. I couldn't even imagine. If I had something that lost me $80 million in a day, I would fire sale the fuck out of it. And these people just held. That's so difficult.
But again, like, it's this idea as if like being early to Bitcoin was picking like the best March Madness bracket. Oh, shoot. Cookie. It's like being early to Bitcoin is like picking the best March Madness bracket, where it's like, that's not how it works. Humans speculate every day. Like every day that you wake up, you are speculating on the future because you don't know it. The future is perpetually uncertain. So every decision you make is a speculation on the future. And so every day you have to wake up and hold your Bitcoin and realize, should I sell it or should I keep holding it based on your speculation of the future? So it's really 10 years of hard work that you have to do every day. It's this notion that like you made a bracket 10 years ago and that bracket ended up winning your bracket pool and you won your fantasy league. It's every day you speculate. Humans speculate on everything. You speculate, how should I get to work? Should I drive in a man-made vehicle that might blow up and kill me, or should I walk? That's probably safer. That's a speculation on the future. So every day that you own Bitcoin, you have to evaluate and speculate on the future and the best interest for yourself. So that is a lot of time and energy that you've done speculating correctly. And so it's just a nonsensical idea that like you made a decision 10 years ago that it's like winning the lottery. It's like, no, all of us speculate every day. Someone that just bought Bitcoin and is angry that I bought it 10 years ago is mad that they've speculated over the last 10 years and speculated incorrectly on the future value of the dollar. And we haven't. But it's an everyday exercise that humans, so that's the thing that I don't think people fully understand, is we are innate speculators. That's like what we have to speculate because the future is uncertain. We don't know what tomorrow will hold. So like today, I woke up, I look at my phone, I see the Bitcoin price. Should I sell my Bitcoin for dollars or not? That is a guess on the future. I don't know for certain that my decision will be correct or not, but I'm going to go with absolutely not. I'm not going to sell my Bitcoin. And I've done that for 10 years, right? It's hard work. Anyway.
It's a lot harder than it used to be. Remember, markets used to close and you'd get like weekend off. This market, I swear to God, Sundays is probably, when I first started trading, that was one of my theories, is that Sundays is that this market does not have a lot of primary order desks. It is a secondary. It is people like me that have, that are doing something else during the week and then catching up on weekends and repositioning, because markets would they would tend to do most of the price action over weekends. So, I mean, it's the market that has certainly evolved and changed a lot from, like you said, the old when it used to feel more just like gambling, right? It is a lot more grown up, I think, a lot more institutionalized.
Yeah. All right. Lieteau, what do you say? Some Q&A? Because I got a question that I want to answer from a friend for sure.
Yeah, kick us off. Let's do it.
All right. This
question, I think lay the 7, right? Aren't we? We're 6.5 point favorite.
Oh, yes.
The first question is a March Madness question.
For those that don't know, my dad went to Duke. We are diehard Duke basketball fans. We play NC State in about 4 hours. Yeah, I think we're priced at -7, which is a lot of points. They beat us a month ago.
We had kind of the gathering place. We had a nice hoop in the backyard and a large screen TV and a nice place to watch the game and stuff. But when we would have people over from March Madness, I swear to God, well, two of your teachers at the local elementary school are Kansas grads, and we would have people just show up in Carolina jerseys. Like, dude, this is like,
well, everyone
Duke house of we are holding down all the Duke hatred. Everybody would come and root against Duke.
Yeah, everyone hates Duke. In the same way, sometimes it's similar to how everyone hates Bitcoiners and Bitcoin.
I told you my March Madness joke. I'm going to submit my office pool a perfect bracket, and I'm here to be paid out. And the guy's going to go, yeah, but you backdated this. You submitted this after the games were played, and then I'm going to explain how I actually have patented bracketology, and you don't know what you're talking about. You people aren't simply bright enough to realize the brilliance of my bracket. It's perfect. I'll be taking my payment now, or I'll see you in court. But you backdated it, dude. It's obviously backdated. Ha-ha! Your bracketology brains cannot grasp the science that I have invented. There is no, we're already beyond anybody having a perfect bracket on ESPN.com, right? Has anybody still batting 100?
Warren Buffett promises like $1 billion for someone to get it because it's mathematically like impossible, right? I forget what his bounty is, but no one's come.
Didn't a play-in team win something? How are you even supposed to get that? You're filling out your bracket. You don't even know who wins the play-in games.
No. Yeah, I don't know. But go Duke. I'm happy for Shire. Second year taking over from Coach K. Elite 8 is big for him. All right, this one, I don't have too much time before I got to run to Easter. This one, though, I wanted to at least give my take on. I'm curious your guys. This is from Jake, so shout out to Jake. He quoted a sentence from last episode where I said, real estate is for you to live in. It is not money. And then he writes, I got a bone to pick with your ass for this one. Real estate is definitely a place to live in, but more importantly, it's an asset that produces positive monthly cash flow via tenants. My question to you is, why would you view this as a loser mentality when every single month you're producing profit while simultaneously building equity in the specific piece of real estate? Tenants are paying you monthly bills and a bit on top. Then you are able to leverage the equity to rinse and repeat the process on a bigger and bigger scale. Feel free to ask that question and tear it up on the pod. Looking forward to hearing the answer. So good question. So listen, first and foremost, there are a lot of things worse to hold than real estate, like by far. Real estate, the thesis around real estate is you can't print any more land, right? You cannot print land. And so the idea is the initial real estate thesis, for those that don't know, in my opinion, is that owning land is a scarcity that you can invest in because it can't dilute you. Not now. Now that gets convoluted with real estate, as if real estate is the equivalent to land. Real estate, you can print. You can just build a floor on top of the one I'm on, and you've now diluted my investment in the floor that I live on in this building.
Mm-hmm.
But the concept of owning land is far better than owning a shitcoin or owning a basket of S&P stocks. But here's my point. The US goes off the gold standard, and the dollar now is constantly going to be debased forever. So you have to own other things. Monetizing real estate was an emergency option, but I don't think it is money, in the sense that money is a market good that you buy in order to exchange it for something else later. A hamburger is a market good for you to consume. I buy a hamburger not to exchange it for anything later. I buy a hamburger to eat it. Okay. Real estate is a market good to consume. You buy real estate to live in it and to go to bed in it and to seek shelter when it's snowing outside. I buy real estate to consume it. I don't buy real estate to exchange it for something later. Now, nowadays, that is a market phenomena because the dollar is such a piece of shit and everyone has to go seek out other market goods for to act as money. Does that make sense quickly before I continue on this rant? But it's not intended to be money. It's intended to be a consumable market good because a market wants one money. A market doesn't seek out many monies. It doesn't seek out many market goods that act as money. You want one money, one market good that everyone exchanges to then exchange later. And that thing can preserve wealth over time. It's easy to store. It's bearer, it's physical, it's scarce. So that's for one. The other thing about real estate is, so in my opinion, so Bitcoin is the best performing asset by a mile, year over year over year over year over year. So it's kind of like my first thing to Jake is you're losing value by not owning Bitcoin. So for people that say, well, real estate goes up pretty much every single year. Against what? Against the dollar? So does this fucking hat. So does this microphone. This microphone gets more expensive every single year. Everything gets more expensive every single year against the dollar. What about your real estate against Bitcoin? Is that going up every single year? No. The dream American home 10 years ago was 100,000 Bitcoin. Then a few years later, it was 50,000 Bitcoin. Then a few years later, it was 10,000 Bitcoin. Then a few years later, it was 5,000 Bitcoin. And a few years later, 1,000 Bitcoin. Now the dream American home you can get for 40 Bitcoin. I bet 5 years from now, the dream American home is going to be 4 Bitcoin. So real estate is depreciating against Bitcoin for one. And then the other thing is you have to measure your inflation metrics. So you're talking about generating cash flow. But if that cash flow, so let's say Bitcoin goes up 50% year over year on average. So it's either 50 to 100%. It depends on where you market because we're coming right off a bull market. But let's use 100%, which is actually not far off, just for the round number's sake. So on average, Bitcoin doubles every single year. Unless your monthly cash flow from real estate is doubling every single year, you're losing to the inflationary reality of because your cash flow is denominated in dollars, right? So you're not out earning the inflation. So I think real estate, in my opinion, real estate is like one of the bigger American scams because the government is so, no, I'm serious, because the government is so set. Real estate is where all the American wealth went. When the government divorced itself from the gold standard, all the wealth went into real estate predominantly. And so you've seen time and time again, the government's ability to protect the real estate market. It will not let the real estate market fail. Like we expend so much policy and energy and stimulus propping up the real estate market. But so I think there's this notion that like the dream is owning a lot of real estate and producing cash flow from that. But you're just down so much in Bitcoin terms. Like you could take your real estate portfolio and in 10 years, take your real estate portfolio measured in Bitcoin today, and then in 10 years, you're going to have far less Bitcoin. So I think it's a fool's game that you're earning cash flow that's constantly depreciating. It's getting you less groceries. It's getting you less Bitcoin. It's getting you less stuff. And the last piece on this, sorry, I know you want to talk, Dad. The last piece on this is there's a huge difference in Bitcoin and real estate when it comes to counterparty risk. So real estate, I have property taxes. I have HOA. I have tenants that could blow up my fucking building. So I need real estate insurance. I have to rely on the fact that the government's going to respect property rights, right? And actually not come in and gouge up my expenses, double my property taxes, come in with a gun and say, this house is now mine. With Bitcoin, I have no counterparty risk. I don't pay any property tax to own Bitcoin. I don't pay an HOA to own my Bitcoin. I can store my Bitcoin in my brain. Nobody knows I own it. So it's also an expenseless asset. So I have no counterparty risk. I have no inflation risk. I am the most performant asset by a mile against everything else. So your cost of capital should be Bitcoin. Is your real estate out earning Bitcoin? That's how people should be thinking about inflation. Inflation is 50 to 100% year over year, because everything else you could own is not going up as much as this Bitcoin thing. So if you're not getting a 50 to 100% raise every single year, or your real estate's not doubling every single year, or your tenant's cash flow is not, then you are on a losing trade. And so for me, that brings us back to how a market should act. So then the question is, why would you own any real estate? Well, because I don't want to sleep outside. So I buy real estate to consume it. I buy a cheeseburger to consume it. I buy a cheeseburger to eat it. Because then you arrive at this conclusion of like, why do I own anything? Why don't I just sit up and starve myself and only own Bitcoin? Well, because I don't want to starve myself. I don't want to sleep on the curb. So I own a cheeseburger to consume it. I own a house to consume it. But as soon as you start saying, no, I own a house because I treat it as money, you're in a losing game, brother. Bitcoin's going to kick your ass. The cost of capital, you're not going to be able to out earn Bitcoin. That's my response. Like, real estate is a market good you consume. It's not money, because then you got to compete against Bitcoin. If you buy your house because you want to live in it, you want to have me over for a movie and a dinner, great. Yeah, consumable market good. You want to treat it as money, you want to compete with the top dog, Bitcoin's going to outperform you every time.
I agree. I can't follow that. I know there's a lot of overlap. Real estate as a store of value, gold as a store of value, Bitcoin as a store of value. It's hard. There's a lot of overlap, so you don't want to be too hard, on gold bugs. But I think really the differences are Bitcoin just does a better store of value job. It's manifest. Real estate has, my problem. Obviously, it does not have the limited supply, the provably limited supply. You can put a penthouse on top of your building if you want. It's not easy to do. Better example, when, Chicago tried to put, the city of Chicago, always broke, tried to put a transaction tax on the futures industry. And we said, have at it. We're going to Indiana. And if that doesn't work, we'll go to Wisconsin. And that's not an easy thing to do. Pick up an exchange. Do you guys have highways, right? And do you have enough infrastructure to support, a large financial institution like that? But that's your answer. That's your reluctant answer. Other than that, real estate is a sitting duck for seizure, taxation and debasement. What are you going to do? What are you going to do with property taxes? Which is, of course, where government are going to go, because they know that's really hard. If you guys, if Chicago's broke, they're going to raise property taxes. And it takes, like I said, a threat to go to Indiana is your only leverage against that. Bitcoin? Right? It's it's instant. It's just better at being a store of value, and it's better at not being a sitting duck for seizure and taxation than any other. I mean, it's designed for that. That's what cypherpunks do, right? They don't want to play by Wall Street rules. They did not take the white paper and sell it to traditional finance Wall Street. They leaked it to a kind of a sub, a pseudonymous group of people that do not like traditional finance. That's the culture of it.
It's just the fiat. This is a lot of why I love this podcast, is just like very raw, and I could be wrong, but it's just like my very raw opinion. I think people get tricked into this fiat mindset world of like, oh, I have cash flow. I have $1,000 cash flow a month from my real estate. It's like you have $1,000 that's depreciating against my Bitcoin by 100. Bitcoin's going up 100% year over year. It's doubling against that cash flow. That your real estate, the actual equity value that you're building, the actual equity value that you're building, is I mean, I have no counterparty risk. I have no inflation risk. I have property tax risk. It is the pristine money in the market for me to buy to exchange later for other things. That is why it was designed. It was designed to be money. And
real estate you can live in, and gold's been around 3,000 years. Other than that, Bitcoin is just better by any store value metric. But real estate you get to live in, and but it's a sitting duck for seizure and taxation. Gold is not. Gold is portable. You can take it across the border. It's hard for governments to seize it. There's just too much of it. It's just, for generational store of value, gold has not. I don't think is really. I've liquidated more people in my career as a margin clerk trying to get along gold.
But this
probably anything else.
This is I love the idea too of trying to introduce everyone back to what should happen, which is society has one money. There's one good in the marketplace that you buy to store your time and energy, your abstracted time and energy in, to exchange for later. So there's one thing that you exchange a long day at the office. There's one thing you exchange hard work and labor for that you're going to save and then exchange later for your groceries, for your haircut, for your Uber ride, and everything else you buy to consume it. If you think about it that way and you go through your portfolio of like, am I intending to save capital to exchange for things later, or am I tending to consume things? Then it becomes really simple. For me, it's like, if I'm looking to save and exchange it for later, it goes into Bitcoin. If I'm looking to consume it, then it's a steak or a house. But that's why it's like, oh, you want to buy a property in Miami Beach? No, I'm not going to consume it. I live in Chicago. So no. And your Miami Beach fucking property doesn't go up as much as Bitcoin. Isn't that like has more expensive property taxes and counterparty risk and than Bitcoin? So no, I don't consume that. And I don't give a fuck if I can put it on Airbnb and make 20 grand a month. It's still not going to out earn the Bitcoin, like the cash flow denominated in a depreciating currency. I have no interest in that.
I like it. That is what the industry is. The industry right now is working on tokenization, level 2 tokenization, right? Nobody's really doing much on Bitcoin. And Bitcoin is the core, right? Is the core value that everything refers to, but all the innovations on layer 2, right? The attempt to tokenize real estate securities.
Well, I have no opinion on this idea that there's going to be a million layer 2s. I have no fucking idea. That's for a separate episode. But yeah, it's like Bitcoin's the market good that you exchange to save and then use it to buy other things. Everything else, I consume it. And that also puts
one of the problems with everything else, right, is the enormous amount of friction. Like, you can monetize your home. Banks love, collateralizing property. That's mortgages. It costs fees and a lot of years. I mean, it's just there's a lot of friction in you can't like take out extra money to go to the Final Four and I'm just going to go out of my home because I got some extra equity in it. There's just too much friction there. Whereas tokenization makes banks are just so familiar with lending against traditional assets like real estate. If you can tokenize it, it just reduces all the friction out of it. I think that's really the main layer of innovation that the industry is looking at right now. Nobody's really building anything on Bitcoin, right? The block size wars are over. Everything, all the innovation, right? Is too.
I keep catching myself in rants because we got to wrap up this episode. But that's the thing too about Bitcoin and shitcoins. Bitcoin wants to be money, clearly. And when I say money, it wants to be the market good that you buy to exchange later for other things. It doesn't want to be a market good you consume. So when people say like, I can't even see the Bitcoin, I can't even touch the Bitcoin, I can't even put Bitcoin in a Rolex. Good. It's not supposed to be consumable. We don't want to consume the Bitcoin. It's the market good that you don't consume. It's the market good that you save and exchange later. Now, Ethereum had an opportunity to be money. So back in the day, there was this thing called the DAO, and they raised all this money in a project, and that project fucked up. And that project lost investors $200 million, I think it was. Now, Ethereum could have taken the position and said, we're money. We are the market good in society. We can't change the rules. We can't revert the transaction. We can't take into account what politicians want. Money is unforgeable. Money is strict. Money is scarce. Money has to be reliable. They didn't take that position. They said, no, we want developers to be able to trust us and build on our platform. So we are going to change the rules. We are going to fuck certain people and bias other people. Politicians don't like proof of work. They like proof of stake. We are going to change from proof of work. We're going to cannibalize an entire industry of the miners in Ethereum, make them go out of business. So if you're an Ethereum miner, unbeknownst to you, one day you woke up and you didn't have a job. Your business was absolutely ruined for no other reason than politics. And so Ethereum decided, we're technology, we're not money. Because if you were to ask Jeff Bezos, hey, is Amazon money? He'd say, no, Amazon's a company. Amazon's technology. People can invest in our technology, but they're investing in this board of directors and this leadership team and this roadmap and this cash flow and this balance sheet. That's what they're investing in, right? So that's the other thing, is like Bitcoin is intended to be money. We don't touch the protocol because we're not appeasing a group of developers. We're not appeasing a political party. We're the market good that you can rely on to exchange your hard work for and then exchange later for other things in the marketplace. And that's the biggest difference between Bitcoin and shitcoins. Shitcoins aren't money. They aren't trying to be that market good that you save in and exchange later. They're trying to be technologies that attract developers and that run DeFi. And when politics are like, oh, we don't like how much energy is being expended, they're like, oh, well, let us meet at the Ethereum Foundation and change the way we use energy. So that's the other thing too, is like in this whole, there's the crypto industry, there's one money. There's clearly one market good that wants to be money. Everything else, it's like investing in Amazon. Like, do you believe in Jeff Bezos or Vitalik more? Right?
Right. Well, I'm sure that's among the reasons Satoshi chose pseudonymity, is so it's divorced from him. Nothing to do with him.
I like the idea that Satoshi didn't create Bitcoin, he found it.
Right.
I like saying it that way because no one created corn, no one created aluminum. Someone found it though. Someone had to have found it. But I think all the pieces to make Bitcoin exist were out there, and Satoshi found Bitcoin, but he didn't create it.
Oh, he just lists numerous. I must list 6 or 8 or 10 references that the white paper is clearly written as an extension of other years of work. Right. I agree. He didn't so much as invent it. It's just further the project that has been in the works since.
The way I think about it is he wrote an email to a bunch of people and said, hey guys, you'll never guess, but I found this thing called Bitcoin. And then he told everyone about it. He's like, look what I found. And then he left. But that's the same thing for whoever found aluminum or whoever found corn or whoever found soybeans. But that's not like Amazon. Like Bezos didn't say like, look what I found.
Right.
No, he invented a company, and that company makes political driven decisions. And when you invest in it, you're investing in the board, you're investing in the balance sheet, you're investing in the cash flows, you're investing in the margins, you're investing in future growth. And that's the difference. Like now Ethereum rides the coattails. They speak like they're Bitcoin, but they act like they're Amazon. So that's the problem that Bitcoiners have, is that they're riding Bitcoin's coattails, is they're not very forthcoming about acting like a company and a technology. But we've all been here. Like when you saw the DAO hack, it was like, okay, you guys care more about being technology than you do about money. That's not a problem, but then don't lie about it, and don't say that because I like Bitcoin that I'm a mean person and I'm a maximalist. That's when you're going to really piss me off, is don't use human behavior and tendencies to manipulate people. But no, you want to be a technology, that's fine. We'll be the market good that's money. We care about scarce money, fair money, commodity-like properties. And you can be like Amazon. It's fine.
I like the way you put that.
Anyway, any other questions? I really want to get to Jake's one because the real estate one, I think, is we could talk forever about that. Anything else, Dylan, top of mind?
Yeah, if we got one, I'm if we got time for one, I'm curious y'all's answer to this question. But at picture 3621 asked, tried asking for the Bloomberg interview, but will Bitcoin replace dollars as a medium of exchange, or will dollars be backed by Bitcoin?
I always thought Bitcoin evolves. I hope I live long enough. I mean, I'm not talking about next year, but I always thought that Bitcoin would evolve as the base layer of value transfer. I don't see any reason why any country would give up its ability to, seigniorage ability. I mean, that's God's gift to being a government, is you get to print money, right? I don't see anybody giving that up. So I would imagine, and I hope I live long enough, that this project evolves so that Bitcoin is the base layer and all others are tethered and settle in Bitcoin. It's just whether your currency is worth like 0.0001 of a Bitcoin or 0.0001 of a Bitcoin, right? You guys can mismanage. I just don't see governments giving up that ability. That's like giving up the ability to tax your citizens. Why would you do that? Seigniorage is God's gift to being in government.
I think we'll see.
How are these people supposed to get elected if they don't mail out stimulus checks to their voters, right? How am I supposed to get elected this year? What have you done for me? The last guy mailed me $300 when times were tough.
Yeah.
I don't see governments giving that up.
Yeah, I think we'll see. I think it's an active experiment. But I will say,
how it happened in El Salvador, I have no idea. But only because they didn't like the IMF. They did not give up their ability to print their own money, or they never would have done it, right? They used the. I mean, they use the dollar. They don't have their own currency. I mean, there's different ways to print money, but I will say, I think it's an experiment. We'll see. What I'm not afraid to say, though, which I think is important, is that I very much could see a world and hope to see a world where Bitcoin replaces everything. I think there's the biggest difference between gold and Bitcoin, one of them, in my opinion, is that gold is an asset. Bitcoin is an asset. Gold has no monetary network. Bitcoin has a monetary network. The gold monetary network is like my feet, right? Like if I need to move gold, I got to go get in a car and drive it to wherever it's going or whatever, right? And so Bitcoin has a monetary network, though, which is the most fascinating part. And so gold needed a monetary network on top of it to act like currency. And that's where we get to where we are today, is that the concentration of the asset gets into those that run the monetary network. The ones with the monetary network have the army and the guns. They say, fuck your gold. It's ours now. You're just going to stick with the currency. But with Bitcoin, that's not the case. So sometimes I think you hear people like Saylor say oh, no, you're not, don't ever say that Bitcoin can compete against the dollar. And it's like, well, I'm not afraid to say it. Sue me. Sue me. I think Bitcoin is the only physical bearer asset that also has its own monetary network. Think about it. Silver doesn't have a monetary network. Gold doesn't have a monetary network. You're reliant on human intervention to export the asset into a network. And Bitcoin doesn't have that. And so I see no reason why we can't see that reality forward, which is investing in a lot of layer twos, a lot of Lightning networks. There's a lot of experimentation. So I think the reason I say it's an experiment, and we're trying to figure that out, but I already think that Bitcoin holds the government already in checks and balances. Like Bitcoin's already begun holding the government accountable. You guys, Biden, you want to get elected and print $10 trillion? Okay, you're gonna have to explain $1 million Bitcoin to the public, right? So I already think that there's general concern and awareness, and that Bitcoin's early stages begun holding the government accountable. And that's what I think that is 100% going to happen, is if you guys want to print all of your money, as long as I have access to Bitcoin, go for it. You can't rob from me. You cannot debase me. You cannot socialize losses on me. But I don't see why, because I do think nation states compete for the piece of land and the governance that's going to let me move there, and there's sun and there's beaches and I can just live my life. And so anyway, I'm not afraid to say I think it's entirely possible that Bitcoin revolutionizes the way we do politics and government, because
And it's the only asset that has its own monetary network. So I see no excuse or reason that Bitcoin would need to be reliant on central human interference to use it as a currency. If we can figure that out and engineer it, but that requires, we got to fund open source developers. We got to try stuff. We got to invest in things like Lightning and figure it out. So that's the part that's still an experiment. But I don't see why not.
I mean, for anybody that wants to store value in gold, I would just ask, how are you going to store your wealth in something where we don't know how much of it there is? I just don't understand how any store of value, at least real estate, is reasonably fixed. I know we've said you can go up, but real estate is a lot closer to being fixed quantity than gold. We don't know how much of it there is. How is that a store of value? I'm going to store my life's work. I'm looking for some place to start so my grandkids can access the wealth I've built it, and I'm going to store it in something with an unknown supply cap where, right? Isn't that what everybody says? You get the price high enough, you'll go find it on a meteor.
Yeah, I just think, I think people should
not a store of value. Bitcoin is and the consensus mechanism that ensures the 21 million is as ironclad as I can imagine, right? It's far more ironclad than real estate or gold
anything we've ever seen.
All time. Gold bugs, if you think Bitcoiners are cultists, wait do you talk to some gold bugs? I swear to God, they've got coins hidden in their attic somewhere that they think I'll rely on when everything unravels.
I mean, I think that's a concept people should chew on, is that Bitcoin's the only commodity-like asset that has its own monetary network. Sleep on that one for a second. The reason gold couldn't scale like a currency is it didn't have a monetary network. The gold monetary network is my hands and feet. If I needed to transport gold, I needed to get off my ass and go walk it to wherever it's got to go. The fact that Bitcoin has a monetary network that is computer software that we can engineer is a huge deal, because we can build it to act like currency as well. There's the capital B Bitcoin and the lowercase b Bitcoin, right? There's no capital G gold and lowercase g gold. Gold's just an asset. It has no network. So we'll see. We'll see if Bitcoin can. I think it can. And I'm not afraid to say it. There's a lot of people out there that are like, no, don't say that. Don't say that. Fuck off.
Yeah, I mean, you can store it. It's just so funny that people consider gold a store of value. You say, I'm going to store value in Rembrandt paintings. Okay, there aren't going to be any more of them, right? He's dead. I'm going to store value in gold. There's plenty of it. Yeah. It's just, store of value has to have something reasonably fixed, and that puts you in the realm of things like art and real estate, which do a better job of approximating scarcity and fixed quantities. But they are certainly, I mean, Bitcoin's just better. It's better at being a fixed asset. It's provably fixed. I can't even pick something rare that derives its value from being rare, right? An artifact. You don't know that somebody's not going to dig up another one of them, right? I mean, Bitcoin has provable limits and provable scarcity, and it's, like I said, just far better. It's not the sitting duck for procedure and taxation that real estate is, and it is more provably fixed than any other store of value I ever come up with.
Agree.
Well done. No, I'm having a hard time following your rant, because I thought that was spot on.
Yeah, agree.
Likewise.
Okay, well, that's gonna wrap. We got to do some Easter before Duke tips. So before we wrap, these questions, obviously we love them. We read them, so please keep asking them. We want to have a conversation with you guys. That's really the point. Again, I'm not here to sell fucking vitamin water. I don't sell ads. I like talking to you guys and having active, open conversation as Bitcoin evolves. Shit's going to happen. We're here to talk about it. So keep asking questions, leaving comments, feedback. If you guys think we're bad at something, you want something to change, I'd be curious to hear. You're not going to hurt my feelings. I want this to be something you enjoy. And that it's every single Monday. So we'll see you next week.
For your listeners that don't know, Jack was on the class of 2012 was one heck of a good basketball team. It took that Simeon, Jabari Parker, Kendall Nunn team to knock you guys out. I'm just curious how would you go one-on-one with Zach Edey? Just back him down. Get to the hoop. The guy's got nothing.
Up to his fucking thigh. Yeah, Satoshi.
He's got one leg. He's got one leg at the 3-point line, keeping a hand up in your face, and one leg in the key, right? I mean, that guy's just too big to be a college. What is he doing in college?
Yeah. Satoshi made me 5'8", 150 pounds so that I couldn't play basketball, so I could work on Bitcoin. Yeah, I don't know. Zach Edey, the other guy, the guy in UConn, Klingon, he's 7'2". People don't talk about him as much because he's 2 inches shorter, but I mean, they just beat you.
Balls.
World's greatest tournament, though, isn't it? I mean, who even remembers the Super Bowl other than the ads or the halftime show or something? But this tournament is just must see TV, right?
Of course, every year. Yeah. So go Duke. And yeah, we'll talk to you guys in the comments. Keep the questions coming. We'll see you next Monday.
Good job.
See you next week.